The Fed minutes continue to dominate the conversation today. Now deemed dovish, gold and silver have paired losses seen post FOMC. So what did you make of the minutes? We have Todd Bubba Horowitz joining us now on Kitco News. Todd, good to see you again.
Danielle, always great to be on with you.
So what did you make of the latest minutes here, Bubba?
I thought they were a bunch of manipulated, ready to go, kind of make the Fed look a little bit hawkish before the election to think they might raise. But what I really think they're doing, I think they're trying to slow down the stock market a little bit. I think they're afraid of the bubble that they're creating because this is a huge bubble in the equity market. And I think that was the purpose of Bullard and Lockhart's interviews and speeches on Tuesday, to kind of slow down the pace of the market. But the market itself, you can obviously tell, has no belief in what they're saying because the markets continue to go higher. So the stocks itself think that the Fed is full of it as well, and the markets continue to pedal their way upwards.
Well, if we look at CME's watch tool, it shows expectations for a rate hike in December have risen to nearly 43%. Do you think that that is really tilting in favor of a rate hike this year?
You know, I find it hard to believe that they will raise rates this year. I find it hard to believe they'll raise rates next year. I think they're very comfortable in the zero rate policy. But based on their history and what they did last year and raised in December for no reason, I would not be surprised if they did it again because they've already lost all their credibility. Now, those Fed fund rates were at 12% 3 days ago before Bullard and Lockhart spoke. So they've risen based on that conversation, and I believe that conversation was purely manipulated to do exactly what it did, to try to slow down the stock market and to get a feel. But their data dependency information, I don't know what data they're looking for.
All right, let's look at gold now, Bubba. The metal falling on the minutes, now back up again, but struggling to really take off. So where does it go from here?
You know, I think gold's going to kind of vacillate here back and forth. I think you get a pretty good ceiling at about 1380 to 1400. I think you got a pretty good floor at about 1340. Now, I expect gold to go a little bit lower here. I'm actually very bullish. I'm trying to buy more and get in at a lower price. But if the Fed doesn't do anything, then we could see higher rates, higher gold prices sooner. But, you know, it all really depends on the Fed. If the Fed raises, then gold's going to come under pressure because the dollar's going to become stronger and push it down. But I think gold is a terrific buy. If you're investing in it, I think you can buy some here. I think we go higher. If you're looking to trade it, I think you look for a little bit of a sell-off. I do think there's one more nice push down to want to buy to end the cycle of what we'll call the gold bear market that started in 2012. But I think overall, I'm very bullish gold and think it will go higher. But right now, 1340 to 1380 is probably a pretty good balance to watch.
Okay, so you're still constructive gold and silver, Bubba.
Absolutely. I'm a buyer. Just the question is how much and at what price. Again, I'd love to buy them lower. But here, I would not be afraid to invest in it if I was going to hold it for quite a while.
And in other news, Bubba, before I let you go, you can now friend the Fed on Facebook. Did you hear that? It announced today it has launched its Facebook page. So, Bubba, you can go now and poke the Fed. How happy are you?
I'll friend them. Don't worry about it. They're my best friends because they do such a wonderful job at taking care of the economy. We'll call them the bubble builders.
All right. I knew you'd love that news item. Thanks so much, Bubba.
Thank you, Danielle.
And thanks for watching this edition of Kitco's Gold Report. We'll see you tomorrow.